The first week of 2023 is certainly not disappointing. We had the private payroll report today, in which caused the markets to drop about 1% across all of the indexes. Now, this data today is a pregame compared to what we are going to get tomorrow with the unemployment rate as well as the non-farm payroll report. Depending on what these numbers come out as, which we'll talk about the expectations for these, it's going to cause a big move in the markets. It's going to cause, I would estimate, a 2 to 3% move up or down tomorrow. And especially because tomorrow is a Friday, the first Friday of 2023, you're going to see a lot of positioning, guys. So we're going to talk about this. We're going to talk about Tesla stock, what is happening. Retail investors are not buying the stock as much anymore. Guys, we're going to talk about all of everything you need to know in the markets. And with Tesla stock here in this video, guys, let's get into it. Hit the like button and subscribe to the channel if you guys like these kind of videos or you just like to make money. All right, guys, before we talk Tesla, let's get into this economic data and these payroll reports, the one that came out today and the ones that are coming out tomorrow. So today you got the private payroll, the ADP report, and payroll growth surged 235,000 jobs. Get this, the estimate was for 153,000 jobs. So you almost or 100,000 jobs higher than the estimate, about 80,000 jobs higher. So this is not going to be a good thing in the eyes of the Federal Reserve or in the eyes of investors that need the unemployment rate to go higher, that need the labor market to soften for the Fed to stop raising rates. Until that happens, it does not look likely the Fed will stop raising rates, because why do they have to? There's a much greater risk that inflation will continue to go higher if the labor market is fine, if the labor market remains super tight, especially in that wage inflation. So that's the big reason why investors need to see the unemployment rate start to go up. But before that happens, you need to see these private payroll reports, the non-farm payroll reports, start to look a little bit softer, in which today's report was not it. So that's why the markets dropped about 1% across the board in a very volatile day of trading. Now, tomorrow, you're going to get the real catalyst, because today was kind of like a pregame. People, they pay attention to the private payroll report, but not nearly as much as the non-farm payrolls. This is the actual net gain or loss to jobs in a month. So this non-farm payroll report is for December. It comes out at 8:30 in the morning tomorrow. We are expecting 200,000 jobs added to the economy in December. Now, if this number comes in, let's say 300,000 jobs, a similar, ratio to the beat that we see on private payrolls today, well, the markets are going to fall a lot. They're probably going to fall 2.5 to 3.5% if I were to imagine. If they come out lower than 200,000 jobs, you could see a fierce rally to the upside, probably about the same percentage amount. Now, 8:30 in the morning as well tomorrow, you will get the unemployment rate for December. Now, keep this in mind. The last non-farm payrolls report we got was actually much stronger than expectations, but the unemployment rate actually went up at the same time. So even if the non-farm payrolls come in at 300,000, just the way the calculations work, the unemployment rate could still go up, like we did see last month. Now, as well as the unemployment rate and the non-farm payrolls, you are going to get ISM non-manufacturing PMI coming out at 10 o'clock in the morning. I think this will really be a back burner kind of data point, because we got two of the most important data points coming out before it. So I really don't think that's going to move the markets at all. But you do have some Fed speakers at 11:15 in the morning, Fed Cook and Fed Bostic, that speak at the same time. At 12:15 p.m. as well, you are going to get Fed Barkin, and you're going to get Fed Bostic again at 3:30 p.m. So these Fed speakers can be important, especially considering we're going to have these data points that have came out by that point, right? They're going to come out at 8:30 in the morning. You got these Fed speakers towards the late afternoon. they're going to have some comments on these data points, and that is what could also move the markets and really add some fuel to the fire to either direction, right? To the upside if we get an upside move, or the downside move if we do get a downside move. So there is that. That's it as far as economic data. That's it as far as what came out on the day. Now, you also did get Russia announcing a one-day ceasefire in Ukraine for the Russian Christmas, which is January 7th. So that was also seen somewhat of a positive thing for the markets today, but obviously the non-farm or the private payrolls definitely outweighed any of that. So there is that information, guys. Now let's get into Tesla and what has been going on with Tesla. Let's look at the day today. Go ahead and pull up the chart, and the stock dropped about 2.9%. We are still off of the 52-week low, which was set on January 3rd. Now, we are severely under 30. We are, as far as RSI is concerned, severely oversold. Like, look at, dude, just look at it. We've never been really under 30 in the past for all too long. Even during the COVID crash, briefly under 30. You hit 27 on the RSI. Now, let's go ahead and pull it up. Like, it's much deeper than that, guys. You are now at, or we're at about 17 on the relative strength index. Anything under 30 is technically severely oversold. So Tesla still, as of right now, is severely oversold and under 30. Typically, if you bought Tesla anywhere around 30 in the past, you made a lot of money. That was like buying the dip on Tesla, and you were rewarded very nicely every other time since then. But since Tesla missed on their delivery numbers by about 3%, a lot of people are concerned about demand, about XYZ. And really, if you guys have been watching these videos that I've been putting out on Tesla, I think that is very much unwarranted for a lot of reasons, in which we're not going to fully get into here in this video. But Tesla's growing at 40-50% year over year in an economy that is probably going to see negative growth in 2023. That's a positive thing. Tesla makes a lot of money. They are a profit machine. So it's not like Tesla is low quality. Tesla is very high quality, and just the simple growth rate is virtually unmatched with high quality companies. Sustainable. I mean, this is where it gets funny. Like, demand problems. One of the most bullish, I think, things for demand is, even over the next 5 to 10 years, all of these countries banning gas vehicles being sold. Tesla is the first there. They have the best technology in the field, and even starting in 2023, you're going to get that $7,500 tax credit for the Model Y and the Model 3, two of the most popular Tesla models, and I think that will also help to fuel a lot of demand. And that's why I kind of laugh at the demand argument, because I think there will be demand, especially in the second half of 2023. I think there'll be more demand than the first half. Simply put, because hopefully by then, economic conditions are starting to loosen a little bit. Hopefully they don't have to be so tight, especially if inflation comes down for the first half of 2023. The Fed maybe will be able to cut rates a little bit, or at least stop raising rates after that point, in which the economy will start to adjust to policy, and you will see people feel a little bit more comfortable buying a Tesla. But nonetheless, guys, the stock has fallen off of a cliff, and even though we're not on the 52-week low, you are still down dramatically from the all-time high. It has been nothing but a bloodbath ever since September. Almost every day you're in red territory, and the stock is now down about 70% from its all-time high. For a high quality name, it looks like 2023, you're probably going to see those concerns until you get to earnings, until you get to more delivery numbers, because after all, you can trade off of fear and greed for a while, but if Tesla actually shows they are posting these 40-50% growth rates in the next coming quarter or two, the stock will be rewarded for that. So that's really the bet that you're making on Tesla. Do the numbers continue to grow in 2023? And the bad thing is they are expected to grow a lot, right? Tesla has put out a 50% growth target. Even Goldman Sachs and other investment banks and analysts are projecting about 40% growth for 2023, which still is pretty high, but nonetheless, I think it is a manageable target. Now, that is kind of what we're facing with right now as far as sentiment is concerned. These are the big things that are keeping the stock down. Now, if we take a look at this article, Tesla stock is showing signs of retail exhaustion as it undergoes a historic sell-off, research indicates. Now, when we skip down to the bottom of this article, I will link it down below in the description if you guys want to read the whole thing. It's pretty short, but virtually out of nowhere, retail stopped buying Tesla stock. Wednesday's retail inflows was $38 million. You can see on a lot of days, you're well over 100 million. Some days you're over 200 million. So this is a dramatic reduction in buying pressure for Tesla stock. And that could be a reason why the RSI is so negative and why the stock looks so recoiled to a big move, right? When you see volume this high and the stock dropping this much, like just for an example, let's go ahead and pull up the loss that you've seen from September till now. I mean, you're down 67% from September, guys. That's a lot. You dropped over 35% in December alone. The stock at this point looks very much ready for that upside move. We need to see some upgrades. We need to see some good news. Now, I do think there is good news around the corner. I think China kind of reopening a little bit, relaxing off the zero COVID stance is definitely a positive thing for Tesla. Does mean factories are going to be open and hopefully less downtime for Tesla's factories. Even though this has not just affected Tesla, it's affected a lot of other companies as well. I do think that is a net positive thing. Like I said, the EV tax credit, that should spur a lot of demand starting in 2023. I'm very confident in that. If people know about this tax credit, in which I'm going to imagine if you're in the market to shop for a Tesla or an electric vehicle in general, you probably do. So I do think that is going to spur some demand as well. I do think there is the off chance that Elon does step down from Twitter and focuses solely on Tesla, and that in and of itself could produce you a 20% positive day, in my opinion. So I do think there is some near-term potentially bullish catalyst on the near-term horizon. Now, another thing I want to point out is that we just got the delivery numbers, which they were a record. So it's presumed at this point Tesla's earnings are going to be pretty good as well, probably a record quarter for earnings also, and that takes a certain degree of risk off the table, right? Comparatively, let's say Apple, right? We don't get their numbers. We don't get their iPhone sales or their other numbers before they report earnings. So it's kind of all the momentum is built into earnings. If they're good or bad, the stock's going to react appropriately. Well, with Tesla, we know their numbers, and we know this is probably not going to be popular, but I think they were pretty good relative to everything that was an issue over the last 3 months. I think they were pretty good. Now, we already know earnings are probably going to be pretty good because their deliveries were pretty good. So there's a lot less risk involved with Tesla earnings that will be later in the month of January. That could also help to give us an upside move some point in this month. Now, it's all going to depend on the data that's going to come out first. Starting with tomorrow, we got to get through that and see how the markets react to it, guys. So that is going to be it for this video. Leave your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next